And now gold has a little bit of a bearish pattern. And based on this recent pullback, using Fibonacci, we can get an idea of where gold could go next week, which based on where it's at right now, we could see gold probably fall another 4% or so. This is a little bear flag pattern, which points to lower pricing. We do need to be prepared for a bigger potential pause and pullback in gold, which I see as purely a opportunity. I don't look at it as a bearish view. I say this pullback is an opportunity. It's also needed. If gold keeps going straight up, the more it keeps going straight up, the more likely it is to come straight back down. So it's not sustainable.
As of late April 2025, gold continues to capture investor attention amid global economic uncertainties. The World Bank's latest commodity markets outlook forecasts a significant decline in international commodity prices over the next 2 years due to weakening global growth and rising trade barriers. Prices are expected to drop 12% in 2025 and 5% in 2026, returning to pre-COVID-19 levels observed from 2017, 2015 to 2019. In contrast, gold prices are projected to hit a new record in 2025 amid global uncertainty before stabilizing in 2026. Gold prices fell sharply on Monday, dropping 1.6% to $3,268 per ounce, extending a decline that has seen the precious metal lose over 5% since hitting a record high above $3,500 on April 22nd. However, gold prices have recently pulled back, falling 1.6% on Monday to $3,268 per ounce. This extends a decline of over 5% since hitting an all-time high above $3,500 on April 22nd. Technical analyst Chris Vermeulen, founder of thetechnicaltraders.com, describes the recent surge as a blow-off phase fueled by investor enthusiasm and FOMO. He cautions that such phases typically lead to corrections and forecasts a potential pullback of 15% to 34%. In line with historical patterns. Still, Vermeulen maintains a bullish long-term outlook, predicting gold could climb to between $3,500 and $7,000 by the end of 2026. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
And now gold has a little bit of a bearish pattern. And based on this recent pullback, using Fibonacci, we can get an idea of where gold could go next week. Based on where it's at right now, we could see gold probably fall another 4% or so. This is a little bear flag pattern, which points to lower pricing. A bear flag is known as the halfway point. So the halfway point from the high, and we can just focus downward where that should go. So we're looking around 31.45 for gold to potentially kind of digest this most recent kind of in price. And then from there, we can gauge where that next rally will be, because what this will create is another pullback and a low. And then we can use Fibonacci to kind of stair step where the next upside target is. So you definitely don't want to be betting against gold. Gold is in a bull market. It's in a sweet spot. But the key thing here is, and I don't know if I have a chart of this on me, but there is if we look at the monthly chart of gold, we've got these blow-off phases that take place. And if I just go back to 2000, all the way early 2000. So here was a blow-off phase, very similar to this blow-off phase we're in right now. We also had one over here, and we had one just before the 2008 financial crisis. And we even had one over here. And believe it or not, all of these are about a 22 to 24% push to the upside. And these are similar scenarios where gold has been in a strong uptrend for a long time. And then suddenly everybody piles in and seems to just run it higher as kind of FOMO sets in. And so we have seen gold right now just run roughly 22, 24% to the upside, just like every other time. And so I do believe we're going to see it have a bigger pause and pullback. And I think we're going to go into a bit deeper of a correction, which you and I have talked about. I'm like, gold is in an uptrend, but it will pull back with the broad market when we go into a recession temporarily. And so I think we're going to get into a scenario where it's finally going to start to run into some steam based on this kind of FOMO trade of money piling in at the last minute just before it has a bigger correction, just like in 2008, where gold pulled back about 34%. So I do believe gold is on its last, this is the monthly chart, the last month or two before we see it stall out and reverse back down. and then go into a pause and a pullback that could be anywhere from about 15 to maybe even 34% correction, which, it bucks the trend. Everybody right now is super bullish on gold. They don't want to hear that. They don't believe it. But the technicals are actually pointing to roughly 20 to 34% pullback in gold once it puts in a top to the downside as it unwinds. So this is what I've been waiting for, is the top in gold, the reset, the financial reset in the markets. And then precious metals are going to be the ultimate buy, in my opinion, once we see gold and silver and miners kind of correct back down, build a launch pad. And then I think we're going to see, incredible multi-year rally in gold again to some astronomical pricing. So that's kind of it from in a nutshell, based on the monthly charts. I like to always use Fibonacci extensions to project forward targets. And I like to use Fibonacci retracements to figure out how much something can pull back. And so if we take a retracement from the 20, I'm going to zoom out a bit so people see the visual here, from the 2025 low, and we go all the way up to this market top, this is showing that the sweet spot for gold to pull back just happens to be right where I kind of drew this line. The sweet spot for gold is between this 38% and a 50% retracement, meaning it'll give back 38 to 50% of this most recent move here of the overall leg up. So we're looking at potentially 2275 all the way to about 2560. That would be a bear market financial reset where, even though gold is a good defensive safe haven, it still gets sucked down with the market when everybody has forced liquidation, margin calls, and pure panic. When there's pure panic in the market, even the best investments and the best stocks still get hit and they get pulled down. And a good example of this is just looking at gold recently and the daily chart. We saw panic selling in the stock market a couple of weeks ago. And even though gold is in the, every year gold's in a better position to be that star performer, but gold still fell 7% with the stock market when everybody panicked. And so that's what happens in a financial reset in a bear market, is we do need to be prepared for a bigger potential pause and pullback in gold, which I see as purely a opportunity, which is exactly what we happen to see also in gold when it had this pullback during 2008. So everything is aligning. It's not what people want to hear because everybody's super bullish. But the gold chart is showing on multiple time frames is getting exhausted. It's almost there.
The broader outlook for gold remains strong, fueled by growing concerns over escalating economic and geopolitical tensions between the U.S. and China. The deepening rift, marked by rising tariffs, tighter technology restrictions, and splintering capital markets, adds to global uncertainty. Recent comments from President Donald Trump, ruling out any delay to his proposed reciprocal tariffs, have further dampened hopes for a resolution. Despite the recent price pullback, analysts and wealth managers remain optimistic, with many predicting that worsening U.S.-China tensions could drive gold to $5,000 or beyond in the coming years. If gold enters a multi-year rally, as some predict, what price target are you expecting by 2026? Share your feedback in the comments below. If you found this helpful video, hit the thumbs up and subscribe to keep up with our latest updates.